Hey Bowtie Nation, Joseph Hogue here with our Wednesday episode of Buy, Sell, or Hold, where I analyze three of the most popular stocks hitting the news, digging into that near-term momentum and investor sentiment. I'll be feeding all of this into our own investor momentum index to give you a buy, sell, or hold recommendation. Real analysis from someone with over a decade as a professional analyst. So if you're tired of 20-year-olds pitching meme disasters while filming in their mom's basement, stick around because this show is for grown-ups. First up, shares of Advanced Micro Devices, ticker AMD, have some very strong momentum and another catalyst coming up tomorrow. Shares are up 6% in the last week alone, though volume has been just average at around 36 million shares traded each day versus an average of 40 million traded daily over the past month. Now remember, that number of shares traded daily, it's an important indicator of confidence in that price movement. We would like to see the price up and higher than average volume because it indicates conviction on the direction, but average is better than nothing. Think of volume of shares traded daily like applause. You want more than just your mom clapping for you, and you want increasing volume as the shares head higher. And while it's not typically a stock you see mentioned on Reddit a lot, it got a big boost with mentions up 85% on Monday when an analyst at Citi upgraded his price target from $100 to $120 per share. We've also seen 3 buy ratings on the stock so far this month from analysts, though the average price target is only about 4% higher from here, with some downside risk to that low. Now, Nation, I spent more than a decade as an analyst, and what you have to remember here is analyst targets are like weather forecasts. Mostly wrong, but you should still pack an umbrella. Analysts are always chasing that price action, upgrading the stock only after it's going up and downgrading after it's fallen. So what's more important here is that upgrade momentum. If you see price momentum and then it's confirmed with volume and analysts start to get on board, like we're seeing here with AMD, that is a very good sign for the stock. The catalyst for the upgrade and the recent price action has been tomorrow's Advancing AI conference, where CEO Lisa Su is expected to unveil AMD's vision for artificial intelligence, as well as updates to some of its products. AMD has been the red-headed stepchild to NVIDIA's dominance in GPU chips for AI, and there's no question that NVIDIA has that advantage in those high compute needs for AI in that model training. But AMD is set to benefit as we transition into an inference world where those AI models are being used. It's in that bigger stage of AI where the compute needs aren't quite as intense that AMD chips could get a big sales boost. And it's that reason that I started buying the shares earlier this year, and it's now my second largest position with 2,500 shares at an average cost of $108 each. I'm up almost 8% and am holding on for that long-term focus. Then the fundamentals here are very strong in AMD's favor, with expected sales growth up 23% this year and 18% next to $37 billion. Earnings are expected to jump by a 31% annualized pace over the 2-year period to $5.72 a share. And while valuation has come up a little since I started buying in February, it's still trading very cheaply at 7 times on a price-to-sales basis, especially considering that expected sales growth. Even at 7 times, though, that's still a 25% discount to the average ratio it's traded at over the last year. Now, against all this, the only thing that keeps me from going all in on the shares here is that relative strength index, that RSI measure that tells us if a stock is overbought or oversold on that short-term basis. Here at 67 for AMD, it's not quite that 70 level that would be a warning sign for overbought, but it's still quite a ways from that 20 oversold level also. Plugging all this into our investor momentum index, which takes that price momentum, the volume, the social media buzz, and valuation into account, shares of AMD get an index score of 65, which is on that top end of hold and almost into a buy. Here I think the RSI and the relatively modest volume is holding the score back, and I'd actually be a buyer ahead of the conference tomorrow, but definitely a buyer on any pullback in the shares, giving you a second chance at that long-term upside. The shares of Meta have been on fire this year, up 20%, but most of this near-term stock direction revolves around technical analysis, the tools I use to know exactly when to buy and sell a stock. To help you get started, I'm opening up our stock analysis and trading signals course at a 30% discount. Save $150 off over the next 3 days. The complete course includes more than 30 videos on how professional investors trade stocks and the technical analysis they use. You'll also get the bonus material on fundamental analysis, trade examples, and trading worksheets to follow your trades. Click through the link I'll leave in the description below and try it risk-free for 14 days. You're going to learn how to find stock trades and never run out of ideas, how to identify price changes before they happen, the top trading patterns used by professional traders. Shares of Meta platforms are up 19% this year, easily beating the 2.4% return on the broader stock market index. It's also the best return among the Magnificent 7 stocks, with only Microsoft even close at an 11% return. Shares of Meta have beaten Apple and Tesla by nearly 40% this year. Now, the stock is up 3.5% over the past week, though only on 12.6 million shares traded daily, which is about 10% lower than the 14 million shares that we've seen traded over the last month. So we're also seeing some indication that buying conviction is slowing down. Investors still seem to be excited about the stock, though, with mentions on Reddit up 28% over the last week and bouncing 62% on Monday for 128 mentions in one day. The excitement is on good news lately, both near and long term. Bloomberg reported Monday that Meta is putting together a 50-person task force in artificial general intelligence and partnering in a $10 billion investment with Scale AI to push that development of AI applications for the platforms. I've been highlighting another interview Zuckerberg did in April as a huge undiscovered opportunity in these shares long term. In it, Zuckerberg revealed Meta's plans to basically take over the entire advertising ecosystem by automating everything on its platform through AI. This is a big part of the share price action this year, but it's far from over as Meta dominates the trillion-dollar ad market. And of course, analysts are all over Meta this year, trying to keep up with that stock. This month, the shares have seen 2 buy ratings, with the analyst at JP Morgan upgrading his target to $735 a share, but Wall Street still can't keep up. Of the 45 ranked analysts, the average price target over the next year is just for $700 a share, which is right at where the stock is now. Even the highest target is only for a 31% upside. The company is expected to post good, not great, but good sales growth of almost 14% this year and next. But when you're already booking $165 billion in sales, it gets harder to move that needle. And on that jump in shares, we're starting to see the valuation creep up as well, now at 10.6 times on that price to sales basis, which is 10% more expensive than it's traded at over the last year. Not terribly expensive, but definitely a premium on these shares. And of course, the big bounce since April has taken the shares into near overbought territory with the RSI at 72, just above that 70 level that indicates exuberance in a stock and the potential for buyers to get tired. Using all this to calculate our investor momentum index, that near-term direction of the stock, shares of Meta get a score of 54, which is deep in hold territory. Now, I do think the company does very well on that AI revolution in advertising, but near term, it's getting overbought and ready for a correction. Meta has reaffirmed its capital spending plans as high as $72 billion this year and recently delayed its next generation AI model, so there are catalysts here for a dip. We've got shares of Apple coming into value territory, and I'm going to show you all the news on that next, but if there's a stock you want me to cover, let me know in the comments below and we'll feed it through our index. Don't forget to join the community by tapping that subscribe button so you don't miss any of our Wednesday momentum videos. Our shares of Apple are flat over the last week and trailing the S&P 500 by more than 20% this year as the company falls behind in that AI arms race. Volume over the last week has been average around 53 million shares traded, so even after that big drop, there just doesn't seem to be conviction here one way or the other. The potential is there for investors to come back though, with mentions surging 550% on Reddit this week off news from the company's annual Worldwide Developer Conference, a showcase event where Apple reveals product upgrades. In this year's conference, we got an aesthetic refresh with unified design elements across devices and some minor AI innovation in the iPad. But Apple once again delayed upgrades to its AI-powered Siri assistant. And at this point, I think Apple is waiting to deliver Siri updates in a self-driving Tesla. So yeah, it's going to take a while. Wall Street has been slowly abandoning this stock, with Needham downgrading shares this month from buy to hold and removing its price target, though Morgan Stanley did reiterate its overweight rating and $235 target. The shares got 2 other downgrades last month from Rosenblatt and Jefferies, with the average target just 12% higher at $226 per share. So even in that sell-off, not much hope from the analyst community. And a lot of this just comes down to the fact that growth just isn't there, with forecasts for just 4% sales growth this year and only slightly better under 6% next. The laptop market is in the shitter right now, and the iPhone hasn't seen a significant refresh, so the buying cycle is hurting there as well. Against this, while shares are trading at a discount to their longer-term valuation, now at 7.6 times on that price to sales, they're certainly not cheap given the lack of growth. Remember, we saw shares of AMD trading at just 7.1 times sales, and that company is forecast to produce 20% plus sales growth this year and next. Now, of course, investors have always paid a premium on shares of Apple because of its brand, but it's still hard to justify a 7x valuation on sales that are going nowhere. On the technical side, the relative strength index is in neutral territory here at 48, so not cheap at 20, but quite a bit from that 70 overbought territory, really just confirming the lack of direction in the stock. Plugging all this into our investor momentum index, while the RSI is fairly neutral at 48 and recent investor interest has been higher, Apple gets a 42, which is right on the edge of sell territory. We could see some positive movement when the third quarter earnings come out in October if the company can show progress in AI, but Right now, there just isn't much supporting this stock or to drive a rebound. Get your $150 off our stock signals and technical analysis course with the link in the description below and see exactly when to buy or sell a stock. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.